How to trade the bearish Harami pattern. This is opposite to its bullish two-candlestick pattern counterpart. This candlestick formation is caused after sellers enter the market and outmuscle the buyers but are not strong enough to close the price lower to confirm the momentum change. The bearish Harami pattern is kept within the previous candlestick's high, open, close, and low range. This is significant because it dictates that the buyers couldn't continue their moves higher, whilst the sellers were able to enter but lacked the selling power to take it lower. This candlestick pattern is more of a warning candlestick that primes you to be aware of a bearish reversal or bearish continuation, so when these appear, it should give you an immediate focal point. Quick action summary of the bearish Harami pattern. Where is it usually found? At the end of an uptrend or during a bearish trend as a continuation pattern. Number of candlesticks to complete pattern. 2. What type of signal is generated? Reversal, continuation. Strength of signal. Strong. What it means in terms of buyers, sellers' momentum. The pressure from the buyers have been exhausted to the bears entering the markets. But the bears are not quite strong enough to take price lower yet.